What is up, everybody? In this video, we're going to talk about adjustments I've had to make in my trading in order to go from averaging roughly $1,000 a day to making $11,000 today. This right here is a recorded session. It's broken up into two parts. It is on my coffee, so if you want to watch these trades actually being taken on the hard right edge, this will be July 26, 24. The link in the description for the coffee is there if you want to join up and see it. Now, some people complain the coffee link does not fucking work. I don't know why. You can put in coffee.com/Fat Cats of Wall Street. So if you're unfamiliar with who I am Fat Cat, and that is Tarukin over there on Tarukin camera. Tarukin! What are you doing, boy? You sleeping? He's not going to be entertaining. And also, if you notice my eye, it looks like I have pink eye or something happened. I don't know if it's from eating my girlfriend's ass. And listen, if you're not eating ass, do you really love your partner? Or if it's from him or one of the other cats putting their nasty little buttholes on my pillows because, I mean, they sleep with me and they put their buttholes on my pillow sometimes. And that's might have what happened to me. Either way, I don't fucking know what's going on with my eye. But, you know, you're going to have to look at it. So with that being said, we're going to talk about some adjustments I've had to make in my trading because chances are when you're trading, environments shift. And that's one of the hardest things about trading. And this is why I say it could take several years to find consistency, at least in futures. The thing is, you trade in an environment, you tend to learn that environment, and then the environment changes, like the volatility can go up or it can go down, and then you get fucked up and you have no idea what's going on, and then it's like you got to relearn how to trade again, and then you figure out that new environment, and then it fucking changes again. And it's like you're always behind what the market is fucking doing in terms of volatility expanding or contracting. In fact, I remember, what was it? I think it was February of 2020. I was trying out for the S&B desk back when Merit was on the S&B desk, and I was trying out for the futures thing. Like, I was consistent on Sim, and I'm like, at the beginning of March, I'm going to do this. And guess what happened? The VIX went, I don't know, 40, 50 or some stupid shit. COVID. That's what happened. And if you've not traded COVID and you're a newer trader, because for me, it's kind of weird to see this generation of traders come in that wasn't there for that. Oh boy, you have no fucking idea what volatility is. Well, I mean, if you've seen a fucking crazy FOMC, that it was kind of like that, but all the time. And it was very thin. So I didn't know I couldn't fucking do it. My edge went right out the window. Well, what I thought I had edge, it went right out the window. Like, I figured out the environment that I was in, and then it shifted, and I'm like, oh, what the fuck, I can't do this. So needless to say, that didn't work out for me. And that's one of the hardest things about trading is it's fine and dandy to have edge or some strategy or what have you, but the volatility shifts. And when the volatility shifts, you gotta fucking make adjustments. And sometimes certain patterns or little weird things that you're leaning into, they stop working. Well, sometimes they come back, sometimes they stop working. So I've recently started to notice that I was starting to have troubles in my trading. And you can check out the coffee like earlier in the week, last week, the week before. I'm like swinging above and below break even like maybe 3-4 times before I finally make $1,000 in a session, 1,200, whatever, 1,500. And usually I stop around there. And I would be making, you know, like 25, 30 fucking trades to just print $1,000. So the reason I was trading like this was because VIX had got so substantially low. You're talking 12s, 11s at times. And if you're unfamiliar with VIX, it's the volatility index. the number goes up. It goes up when ES and NASDAQ go down. And it's like opposite. It goes down when ES and NQ are like going up and hitting all-time highs. Basically, when markets are dumping or going down, volatility just naturally fucking increases. And when the markets are going up, volatility tends to contract. So when that's happening, you have to make adjustments in your trading. And it took me a while to realize I needed to make adjustments because really we've been in such a low VIX environment for, I don't know. It feels like 6 months, if not more. This entire year has been kind of low. The last time we were like in a higher VIX, like VIX 20 was, I believe, October of last year. And just like that P&L you saw, I've had $10,000 days then. And they're in the coffee as well, if you want to go back to that time. But for the most part, that just doesn't happen, but maybe a handful of times a year. If VIX is high, the volatility is high, I just make more. And that's the thing. Market conditions dictate P&L. So back to my trading. So I'm starting to notice that like I'm breaking even more. I'm kind of hitting this. I'm up and then fucking something wipes me out. And then I'm up and then something wipes me out. And the thing is, during this low VIX environment, in fact, the last week, the week before, I'm mostly grinding out like a tick or two. Like I'm picking up just a tick or two. I'm literally picking up the spread where I can because that's what I needed to do to make the adjustment for low VIX. We're kind of in the 15-17 range right now. And the last time we were in the 15-17 range, God, I remember complaining about it. And then VIX got to 10 or 11, 12, and I'm like, fuck, I wish we had VIX 15. So I remember during VIX 15, 17, I'm like, dude, I could pick up like a point, and that's 4 ticks in the ES. I'm like, I could pick up a point quite frequently, actually. And I have a video. Called Scalping FOMC. Great fucking thumbnail, by the way. I'm kissing Jerome Powell. He was a good kisser. Maybe that's how I got this. But anyways, because I ate his ass. But anyways, hey, you know, I want to fucking know what the numbers are, right? If you want to know what the fucking numbers are and, you know, you can make a lot of money by eating somebody's ass or, you know, whatever. Hey, everybody's got a price. So I'm just really cheap. Anyways, in this video, I talk about how the price action is pretty much the same. In this specific video you're watching, where I'm circling these yellow things on my coffee, this is called the N pattern. I'm probably going to just call it Nancy or something like that because I have an M and an N pattern and they sound the same, so I got to shift the names. But this is a great little coffee video. It's this pattern I've kind of found that I think I can continue to exploit. So that's also in the coffee as well. And it's the video right before the P&L I showed you on June 26. So those 3 videos consecutive are pretty solid. And right in this video, I'm breaking down this Nancy pattern and how to leverage it. So anyways, the price action is the same. The horrible sloppy choppy shit we see in ES and NQ, it's all the same type of chop, and you got to look at it like a rubber band, and I explain it in this video you're seeing behind me. When VIX is low, you got to pretend it's just like a rubber band that's at its natural resting state. The price action's all the same. The difference between a high VIX and a low VIX is in a high VIX, it's like taking the rubber band and stretching it. In fact, again, I talk about it in this Scalping FOMC video. Link in the description if you want to check this out on YouTube. So as VIX goes up, it's like stretching a rubber band. So all the chop and all of the ranging you see just gets more stretched. But other than that, the way it pivots and chops and does all this weird janky shit, It's the same. It's either more compressed or it's taller. And if it's more compressed, you can't get as much. I remember when the Ukraine invasion kicked off, and I mean, you could get 50 tick trades, no problem, quite frequently. At least I had no problem doing that. In fact, I remember getting 100 tick trades and having them completely come back. I mean, I've had some pretty big trades come back on me, and I don't know. I mean, are you really a trader if you don't let big trades come back in your career? No. I remember years ago, somebody's like, I'm going to unsubscribe because you let a trade come back. But lucky for you, I like you. And it's like, go fuck off, dude. Like, you've never let a trade come back? Come on. But anyways, so when VIX contracted to 12 or whatever, it's like, dude, I can't get 4 fucking ticks. Like, I'm a momentum scalper, like, and I've started to scalp more. I have a video called Why You Should Scalp in 2024, made like 7 months ago. Because volatility has contracted substantially in the last year or two. In fact, I had a Zoom call with Merritt, I believe last week on Wednesday, and we were kind of bullshitting, and you know, I told him, you know, a lot of trades have been coming back this year, and he goes, yeah, same for me, and I've had to make adjustments. So our Lord and Savior Merritt has also had to make adjustments because he's also experienced trades collapsing back. I mean, I would say within the last year, 2 years, trades just have not been hitting target. And that's because volatility has contracted. That rubber band has gotten smaller. So what would be 50 ticks then in a VIX 20, you're looking at maybe like 15 ticks, 10 ticks, maybe 20 ticks, and VIX 12. And that's an adjustment I've had to make going into this lower VIX environment that everybody just complained about. Now people are kind of having a tough time as it's expanded, because that's what happens is, like, you need to go through enough of these cycles of high VIX, low VIX, and find some form of consistency in each of those regions, or know how to adjust to it in order to just be consistent through the years. I mean, there's obviously more to it, like psychological shit and whatever. But with that being said, this is why trading takes years, is you need to go through these cycles. Like, if we go like VIX 40 or some shit, you guys are going to get fucking whacked. Okay? That if you've never found consistency in that. If you're consistent now and we go VIX 40, VIX 30, you guys are going to get fucked up. You really need to scale down size in that type of environment, or just willing to be taking more risk. But yeah, so with that being said, you know, it went from me being able to get 20, 30 ticks quite frequently down to I'm getting like 4 to 8 ticks and a VIX 15. And then now it's VIX 12. I can't even get fucking 4 ticks. It got to the point where I'm like, I can't even get fucking 4 ticks out of this fucking market anymore. So I'm just started grinding ticks, a tick or two. Now there'd be times where I'm probing at it and I would get momentum and get 4, 8 ticks, but a lot of the P&L over the last 6 months or so has been comprised of just grinding fucking ticks. Leveraging stock correlation, because when ES is just sitting sideways forever, trying to leverage reclaims or slips with stocks would help me find that tick or two. So it's not like I'm just trying to pick up something on the spread. There's a lot of like looking and focusing just to get that tick or two if I can get it. I do have this video called Advanced Price Action, Slips and Reclaims. It'll be in the description. So if you're unfamiliar with that terminology, I highly recommend it, because what I'm going to talk about in this video has a lot, the adjustments I've had to make has a lot to do with what's going on in that. So with that being said, you know, I'm grinding a tick or two. I post this shit on Twitter. I know it's called X now, but for me, it's always going to be called Twitter. So, You know, and I remember this trader comes out of the woodwork. Oh, you're taking on all that risk for a tick? Oh my God. It's like, no, I'm really not. Like, I'm going for very high probability, almost guaranteed ticks. And I do have a video called Forecasting Trades. It's a lot easier to predict the next tick or two. Plain and simple. I've done big write-ups on this. And this may be a video in the future if I feel like doing it or not. But I did a write-up on this, and some guy told me, that's bullshit. So I invited him to trade on the hard right edge in a stream, and he did, and he didn't perform well, and I performed fine. So we kind of traded side by side, which that might be an interesting video in the future. But it's a lot easier to predict the next tick or two, the next few seconds, than the next 5 minutes or another bigger range. Again, this video I highly recommend because forecasting is a tough business, folks. So with that being said, you know, the normal for the last several months has been grinding ticks, 2 ticks. If I can get 4, I will. That's kind of a home run in my book. But I started to notice things getting a lot more challenging. Like, it's like, fuck, man, I'm starting to I'd be up a tick or two, you know, I'd be grinding a tick or two, and then the problem is, like, when you get a tick, it's just so much commission. I mean, for me, trading like 12 lots, I get a tick, that's $150 a tick, but minus commission, it's like 103. But if I lose a tick, it's minus 190. So if I'm losing 4 ticks in one go, because it just slips down really quickly, it's going to take me like 5-6 trades to get back to break even, just grinding ticks. So I kept experiencing this where I'm like swinging up and down on P&L because these losses were kind of blowing me out. And I started to notice that. I'm like, damn, man, there'd be times where I'd get blowed out $1,000 or $2,000, and it would just take me forever to grind it. I mean, don't get me wrong, I can pick up 4 ticks every now and then. It was just a lot more rare. And I'm like, fuck, man, I'm starting to get blown out a lot more. But for me, I've like, when this type of shit was happening during the coffee sessions and stuff, you know, I talked a lot about mental resilience. I'm like, you know, you got to be content. You got to be content. You got to be okay with shit. In this video right here, it's called Ideal Trading Emotions. I highly recommend that video right there. I talk about contentment, patience, and calmness. Those are the ideal trading emotions you need to condition in your brain in order to do this job, because P&L swings are going to affect you at some point. I have another video, New Trader, it's called New Trader Psychology. Again, these videos are going to be in the description. There's Tarukin. Tarukin! Look, you're famous! You're famous, Tarukin! Do something for the people. He doesn't give a fuck. He turned his back on you. Can you believe that? He's listening to me, though. But anyways, I talk about in this video how every P&L swing, every trade is anchoring emotions. So as a day trader, you're supposed to be good at identifying patterns, right? Well, what you're not realizing is happening, like in this video here, is there are psychological patterns or emotional patterns being anchored to specific price action patterns or P&L patterns, P&L swings. So if you're above and below break even, fucking 30 trades in and then 35 trades, you finally make $1,000 or whatever, typically that would fuck with most of you and you would blow up instead of just hanging in there. So, you know, I took it as a lesson. I'm like, you know, whatever, this is great. This is great. Even though the environment is challenging, this is great because as long as it's not fucking with me, I can just work on my mental resilience and, you know, this is fine. Contentment, really. So, but either way, it's still challenging as fuck. So, earlier this week, you know, I'm struggling on Monday. I'm struggling on Tuesday. You know, it's taken 30 fucking trades to get $1,000 because we're swinging everywhere. And I'm like, fuck, man, I'm going to start doing some drills. So, oh yeah, and I was also trying to exploit. There's a new trading strategy I had been testing, and it had been working flawlessly. And I decided to leverage this fucking strategy on a combine because my trading's not scalable. It's not. So I have this new method. I talk about it in the coffee. What I think I need to do in order to get 20, 40, 50 lots into the fucking market, 50, 100 lots. How can I do that? Because you can't do that when you're grinding ticks. It's just not going to fucking happen. So I'm like, you know what? I asked everybody, I'm like, you think I should try this on a combine because the strategy's fucking winning? They're like, yes. So the first session I tried, it wins right off the rip, and then it gets decimated. And I'm like, what the fuck? It's, you know, in all my testing, it's been working. And then I decide to test it again on sim, and gets decimated again. And I'm like, fuck, man, something's going on. And then I started to notice, you know, that there's this time where the market environment would be so hard to get a tick or two. I mean, it would be very hard to get a tick or two. But if you're wrong bad, and it would just blow out so quickly. And for months I've been saying, you know, this is one of those days. It's hard to be right, easy to be wrong. And I would constantly struggle to get a tick or two. If I don't take the tick, I would get absolutely fucking blasted on the back end if I held it. And if I would hold it, it would just keep going and keep going and keep going against me. And I was just getting in a lot of trouble. So I'm like, I had to be quick, have to be quick. Got to take the tick, got to take the 2 ticks the moment the momentum stops. Otherwise, the moment I get complacent, I get fucked. And this is what contributed to a lot of P&L swinging, where I'm above and below break even fucking 3-4 times in a session. And then I finally make $1,000 and I'm like, I'm done. So I'm just noticing, like, on the 3-second chart, because I trade a lot of 3-second charts, the ES would get stuck on the spread for like, 20 seconds to a minute. And when I look at a lot of my scalps for a tick or two, typically it's sub 5 second, sub 10 second trade. So when I have these really good scalping sessions where I can grind ticks or whatever, I'm basically immediately getting a tick. So I start to do DRC episodes, and again, they're on my coffee. Type that into your browser or whatever if you want to go check it out. I don't know if that QR code works. But I did DRC episodes, 2 of them earlier this week. I think that watching this entire week would be interesting, actually. So I do 2 DRC episodes, daily report card episodes. So I'm looking at these fucking things and I'm like, you know, a lot of these trades, a lot of the time ES is getting stuck on the spread for way too long. It's hard to get a tick or two. And then it just explodes in one direction or another. It's like it's like the market's walking everywhere. And what happens is, like, this might be a future video, but, like, as far as the auction process goes, there's like 3 phases. And it can go in any order, right? What came first, the chicken or the egg? I don't fucking know. But there's a phase, and let's just say phase 1 is ranging, right? It really doesn't matter. But we're going to talk about the 3 phases. It doesn't matter which one comes first or last because it's a circle, right? So we're going to start with ranging. So we have ranges. They're really rectangular, pretty good looking. Then we have breakouts. And then we go through this phase where the market is desperately searching for value. And ranges are value, okay? Ranges are value. I recommend checking out this Understanding Value Areas video. In the description, you will find a link to that, so you don't have to search for it. So ranges are value areas, same thing. Okay, the market agrees on this area. So it's value, it's where buyers and sellers agree. Then you have a breakout. Typically, when you have a breakout, it's like a measured move. Talk about this shit in my coffee all the time. I think I talk about it in some YouTube videos as well. But when it breaks out, right, whether it's up or down, it goes into this phase where it's searching for value. And when it's searching for value, the price action becomes a lot more erratic. It seems a lot more random. It seems like it's walking everywhere. And it'll do this on higher time frames. And what I started to notice is like my normal scalping was having an issue. And then I look at the higher time frame, okay, like a 30-minute, 10-minute chart. And I noticed that ES had been in a downtrend for like 8-9 days. So I'm like, okay, well, we haven't really experienced a downtrend like this in a very long time. And knowing that the market is on a higher time frame in that phase 3, it's starting to attempt to look for value. So it's going through this these erratic motions. Now, on a very small time frame, it'll cycle these 3 phases multiple times. It'll go range, like micro range, breakout, look for value, consolidates, breakout, searches for value, and it keeps doing that over and over. However, the larger time frame is going to further influence that smaller time frame. So I'm like, all right, we're kind of in this phase where we're looking for value, and I always tended to struggle in that phase. Like for me, my bread and butter was always mean reversions. That's actually why I did really good today on that P&L. We can look at it again. Today was a mean reversion day. And I knew what was going on. This is why I did very good. Mean reversions are that's my jam, okay? Always struggled with breakouts. Now I've gotten substantially better at breakouts. Not that I fucking hold them by any means. I scalp the fuck out of them, but I'm not scalping it to where I keep fading it and getting fucked. You know, if it's breaking up, people fade it short and they keep getting fucked. Sometimes I will, but I know the risk I'm dealing with and I quickly cut it. But now I've gotten substantially better with breakouts. It's phase 3, searching for value, where I tend to struggle until now. Okay. So, and that's the thing, folks. This trading channel is my journey. If you're not getting better, then what the fuck are you doing? I know some of you guys are like, Fat Cat, you said this and that a few years ago. And it's like, dude, my opinions change as I gain more experience and see things. Like, I evolve, baby. And I get better with shit, and then I discover new things. So this is why I think trading courses suck. How you look at them and how you can use it to change your emotions and all that. What I've never really talked about, and I talk about it more in the coffee, but I should do it on this YouTube channel, is how to make technical adjustments in your trading by adjusting the P&L. So I start looking at stuff and I'm putting things together. I'm reviewing the trades. I'm like, God damn, dude, what the fuck is going on? You know, I'm just like struggling really bad. Like I'm having a hard time getting a tick and I can get it, but man, when I get blown out on the back and it blows me the fuck out. I mean, it's one thing if we're VIX 12 and I can take a tick of loss or 2 ticks, but it's blowing me the fuck out like 8 ticks and it ain't coming back. So I'm like, God damn, you look good. So I'm like, what the fuck is going on? So I'm like, I'm looking at all these trades and I'm, you know, God damn, like most of them are like 1 tick wins. And you go, wait a second, you know, in VIX 15, and we're in a VIX 15 right now, I was able to pick up 4 ticks all the time. And I'm like, looking at the video, and I start seeing if I could have picked up 4 ticks on all my 1-tick wins. Sure as a fuck shit, I could have picked up 4 to 8 ticks. So I start making a technical adjustment. So I take my P&L, you know, with the commissions and all that included, and I adjust the P&L as if I held all those trades for 4 to 8 ticks. And instead of making $1,200, it would have been $8,000. Okay? And here's today. So, I've had questions about that, and this, you know, I've had questions about that, you know, dude, isn't that hindsight? No, it's not hindsight, and in this coffee video you're watching right here on the end pattern, I talk about this, so I'll kind of sum it up. When you're reviewing the trade, you want to look for where you could have done a little better. I'm not looking to get in and out of the trade or get out of the trade at the very top or the very bottom of the move. Realistically, I know that's not going to happen. So really, if I was to hold this a little longer, how far would I take it? And it's about 4 to 8 ticks. So I start making that adjustment in the P&L. Like realistically, I would put it there. And there'd be times where it would go, you know, 18 or 20 ticks in my favor, but am I going for that all the time? No. Most of the time I would be going for 4 to 8. For the very reason I told you earlier in the video, and what I mentioned with the FOMC video right here. It's like a rubber band. So 1 to 2 tick wins in a VIX 12 is going to be like a 4 to 8 tick win in a VIX 15. Because I remember VIX 15. God damn it, I just turned his cat tree, and now he does this again. Anyways, so a 1 tick win is like a 4 tick win in a VIX 15 versus VIX 12. And a 2 tick win is like an 8 tick win in a VIX 12 to a VIX 15, 17. So I'm like, fuck. I make that adjustment in the P&L. I'm like, holy shit. I would have actually done really well. And then it dawned upon me that, and it's crazy because it's taken me a while to like figure this out because it's been in such a low VIX for so long. I stopped checking the VIX number. I would check it all the time. And I just stopped paying attention that it was going up and that I could start to make adjustments. And the thing is, when the VIX goes up, you're going to also experience bigger swings on the back end. So what was happening to me is, you know, I'm trying to get a tick or two, and I would get blown out on the back end for like 8 ticks or some bullshit like that. But the thing is, I'm not adjusting the winning side, because like when you lose a trade, when I get into a trade and it's going to lose, because you're just going to take losers, it's going to happen. How quickly is it blowing out against me? How fast is it blowing out against me? In a very low VIX 12, it's really not blowing out. You know, it might like creep down 2, 3, 4 ticks, and you can generally cut it off quickly. That's why grinding out a tick or two on the winning side works. And I typically have a relatively high win rate. So, I mean, like the win rate from today was 60%, but I'm somewhere in the 60, 70% arena, typically with my win rates. So 60 is pretty high. Guys who are taking on bigger trades, they're in the 30, 40s. So for a scalper, I would say, you know, being in that higher realm of stuff. I mean, we did make a few mistakes today. Could have been better. But anyways, the reason I was struggling is I just didn't make the adjustment on the winning side. And I was telling myself, you know, man, if I could just get 2 ticks or more 4 tick wins, it would just really offset the losers I'm taking, and I wouldn't have such drastic P&L swings. Well, sure as fuck shit, I do a DRC episode, and I've kind of had this bad habit of just doing DRCs when I lose. But I decided to do it on some winning days to see where I'm sloppy and where I can tighten shit up. And I shit you not, every time I do that, something insane comes from it. So I realize this, and I start making the adjustments the next day, and it's a very good day. Like I pick up, $1,000 in a matter of just a few trades, whereas it would take, 20, 30 trades beforehand. But also, when I made this discovery during my review process that prior day, I had been doing drills. So I started doing drills, and I'm like, man, is there something I can exploit? Is there something I can finesse differently? So I started doing drills, and I felt like everything I touched just immediately turned into a loser. So I started doing these drills, and I'm like, fuck, man. They're not taking reclaims and slips back immediately. They would put them in, stall, and then they would never just take them back. They would just fucking go the other way. And it kept happening. And I'm like, fuck, maybe I should trade the opposite of that. And just kind of fade that shit. And it wasn't really working. I'm like, well, let me resort to my normal trading. So I started doing my normal trading. I'm like, fuck, it works. But man, I'm only getting like a tick. So I'm like doing these drills, and it's like, it's frustrating because I'm just like, just testing a bunch of different fucking shit. And then I realized that they're doing these N patterns, which is in the coffee. You can see how I'm drawing some right now. I'm showing an M versus an N pattern in this coffee TV. So I'm showing one right now and how I finesse it in this review. But I start to notice this new pattern. I'm going to call it Nancy at this point, because M and N sound too similar. So Mike and Nancy, because there is an M pattern, which I've been trading for a long time. So I'm starting to notice this Nancy pattern where it makes this like N shape on the 3-second chart. It'll do it on the 10-second as well. It's fractal. And I start to notice how they kind of just do this 1-2 retrace, and then they blow out, and they go 1-2, blow out, 1-2, blow out, 1-2, blow out. So I'm like, fuck, maybe I should start trading that. So I start trading that, and it's working beautifully. And when I'm testing it, I would have made 4,000. And then I do, my DRC. After that session, realize, hey, I could have been holding for 4 ticks this entire time. So the next session, I start to trade my normal trading with stock correlations. And the stocks are being kind of funny too. They're kind of stalling their reclaims, and they're not hitting their slips and reclaims, and kind of doing that 1-2 and blasting out the other way. So I'm like, fuck. The prior day I traded this in pattern on ES, and I wasn't using stock correlations. Maybe I can just trade it today and just use ES on the different time frames. I mean, because when VIX was really high, I could trade just ES patterns. The reason I introduced correlations was because I noticed the same shit that happened in ES was happening in these other products. And it was just helping getting into trades. But I find when volatility gets higher, patterns and setups get cleaner, that maybe I don't need correlations as VIX goes up on ES. Because there's been many of times where I could trade just ES standalone. But when I started matching it with other products, it would help substantially, especially when it was fucking dead. VIX 12 forever and flatline, and it's not even fucking moving, and I'm trying to grind a tick or two out of it. So that's when the correlations were really helping. So I'm like, kind of having troubles using stocks. So I'm like, let me trade this in pattern, and fucking sure as a fuck shit, it's working. Now today, it didn't work as well as it did the prior day. And what I started to realize, like, today's a mean reversion day. I just, the way it was ripping on the charts and just putting in these vast expanses, I'm like, dude, this is mean reversion. The problem with mean reversion is you don't really know where the top or the bottom is, and it's comprised of the three phases on a smaller time frame. So micro consolidation, micro breakout or micro trend, and then micro value search. So I'm like, I think these N patterns, these Nancy's, I think they work better during the phase when it's trying to find value, because ES has been in a downtrend for 9 days. So it's starting to go into this phase of trying to find value. And I'm not that great at trading those value hunts. That's typically when I start to give back or lose a little bit. And I typically attempt to stay out of that shit or just scalp it. So I'm starting to realize this Nancy pattern, this N, I think this N pattern's always been here. I think I can continue to use it for months, maybe years into the future, because the M, the mic, the slipping, the reclaim slip video right here, this reclaim slip video, that shit still works. That shit still happens. So I start to, and that's another thing, when I was struggling, when I was doing my testing, I'm like, fuck, dude, ES is still taking reclaims and slips back. I just need to trade into those. But like getting into them was like not cut and dry all the time. So that's when I found this Nancy pattern. So today started mean reverting, and I'm like, okay, I'm having a little bit of troubles with it. It's not quite yielding as well. It's tend to not wanting to do that. We're seeing a lot more chop walk. We're starting to see a lot more mics or mid slip or like micro slip range type of shit. I have a video on the coffee that explains all of these patterns. And when I see new people join, I post out this playlist that you guys should watch. And there's one about patterns in there, which talks about all of this shit except the new one. So I start to realize today that this pattern is working, but only under certain circumstances. The market is on a higher time frame. It's finding value. It's mean reverting. Even though it looks like it's breaking out or getting stuck in a certain area, higher time frame, it's mean reverting. So that is influencing the smaller shit. So when you look at this P&L, it's comprised of a few larger mean reversion plays, but a couple of mid slip patterns, and there's a lot of the Nancy's. So the ones that you see where I make 600 to 1200, those are the Nancy ones most likely. Some of them could be mid slips or mics. So that's where I start to notice, okay, this pattern, it works, it's great, but there's a certain time when it's going to work a little better than others, and that's fine. And I used to hate chop walks. I used to bitch about them all the time. And that's basically a channel or a range. And now I'm starting to get better at leaning into those. And typically when you see a chop walk or a range, that's kind of a trend or a breakout. Because when the market breaks out, it doesn't go straight up. It kind of chop walks its way up. So if I see myself getting pressed on the back end on a chop walk, I'll tend to cut it. And I tend to finesse and scalp those a little bit. I don't write them out completely, because if it's compressing up the market, all those higher lows, those are stop runs, and they can just domino and blow out when we go down. So I figured I'd make this video and talk about adjustments in my trading, kind of some cool shit that's happening, how I've managed to make this kind of P&L. And had I not actually reviewed the session, fuck, dude, who knows what today would have looked like. It might have been just a struggle again. But literally making that adjustment, it's like, fuck yeah. And I'm treating 4-tick wins like it's a 1-tick win, and I'm treating 8-tick wins like it's a 2-tick win. But now that VIX is higher, we're more stretched, there's more volatility, I'm able to go for those 4 to 8 tick trades more frequently than I would in VIX 12s. Just like an 8 tick trade, that's a home run in VIX 12. So it gives you the illusion you're making more money, which hypothetically you can if you stick to the same size, but odds are you're going to be experiencing a lot of pressure on the back end, so you're going to experience a lot of quick movements on the backside where it's going to push you pretty quickly on the back end too. So typically you're going to want to scale down size in this environment in order to afford the risk, if you guys are doing combines or whatever, to not get blown out on the back end. So when volatility increases, typically you want to scale down size because you're going to be experiencing quicker, faster blowouts on the back end. But you're also going to be experiencing them on the front end. And take it as a lesson. I didn't make that adjustment on the front end, on the side where I'm actually making money. I was keeping it too tight, and that's why it was such a struggle and not working so well, because hey, if I'm going to take a loser, it's going quick. I just need to let it breathe a little bit more on the winning side, because now I can, and now it's starting to hit that shit because there's more volatility. So it gives the illusion that I'm making more. Yeah, I'm making more. But it's because it's just this rubber band. It's the same type of price action, same 3 phases: range, breakout, looks for value. Does it again. Range, breakout, looks for value. And it does it on the smallest time frame, and it does it on the larger ones. So it's all fractal. And just making that top end adjustment, because I'm noticing certain traders are complaining that they're starting to have problems. I'm like, look, this is what I fucking did. You need to start making adjustments. Because chances are, if you're not adjusting to the recent higher VIX, chances are what you were doing a few months ago or a month ago is not working as well, so you're going to need to make adjustments. If I got to make adjustments, you're probably going to have to make adjustments too, because in the end, we're probably trading the same products. NASDAQ and ES are sisters. They basically do the same shit. So chances are you're going to need to start making some adjustment. So I hope this video helps you understand what that is. And I will see you guys in the next one.